dive into the training today. So if this is your first time for you to join us, you can tell me. So you can say yes. Is it your first time? So that is a question I'm asking. Is it the first time you're seeing my face, or you're coming to our webinar? Oh, I can see CPA Lucy. Karibu sana, karibu sana. And if this is your first time, you can go to our website, to our social media handles. Oh, I can see so many first timers. I've been doing tax training since 2018, and we started the tax webinar since 2020 during COVID. We learned how to train online, and we've been doing it almost on we do them monthly basis. So karibuni sana, you're going to get a lot of content during the whole of this year. We have a lot of good content lined up for you. So you can go to our social media handles, RWK Africa, and like and follow us. You can go to my handles, Dr. Regina King'ori CPAK. You're going to see me, and you can like and follow and share. And every time we have something, it's always going to alert you. Also, my team is telling me that we are live on YouTube. Yes. I almost said Facebook. We are live on YouTube. So we have a YouTube channel. I started a YouTube channel this year, January. So Dr. Regina King'ori CPAK, we are live on YouTube. So whatever you're going to learn today, if you don't understand, you can go back and just listen again. My first time joining your webinar, but I follow RWK Africa every day. Thank you, Ronald. Thank you so much. Thank you so much. Kindly follow us, and you always get very good content that is. That YouTube channel is supposed to simplify business, to simplify your business, to help you scale your business. So we'll be talking about businesses and issues around the business that you get to learn. You get to learn a lot. So karibuni sana. Let's go back to the training. And you can always ask a question. There's somebody aligned to answer your question. And at the tail end, I'm going to give you an opportunity. I'm going to answer those questions that you might be having. So if you can see my screen, you can say a yes. If you can see my screen and I've written their content, so tell me a yes. Let me just see a yes so that I can proceed. Yes. Let me just see. Yes. Peter, John, yes. So let's continue with what we have today. So today we are going to learn about tax trends. And we always do this webinar every single month. Tax is very revolving, very dynamic. There's always changes that are happening. Every day there's a tax consultation or something that is going on. And that's why we felt the necessity of having those tax trends where we just discuss them in an hour per month, and to just align you with whatever is happening and whatever effect it has on your business, so that you're able to understand. So I have quite a lot to cover. And if that 1 hour is not enough, I'm going to share these notes to you, and you're going to look at it again. So I'll share the notes with you. I'll tell you the formula of how I'm going to share. So my co-host, you can also do that registration. There's a registration link on the chat. You're going to register on that link. Then you're going to share these notes with you after the webinar today. So we are going to talk about significant economic presence. This is a tax that was introduced last year. It is effective this year, and I'm going to explain to you what is SEP. What does it mean? Amendments in order to pay, a few amendments. Changes in NSSF contribution, a few changes that have happened. Changes to excise duties, changes to withholding tax, changes in VAT. Changes to Miscellaneous Fees and Levies Act. I also talk about tax amnesty. Remember, we have a tax amnesty that is ongoing. And ETIMS, reverse invoicing. And I'm going to ask you if your ETIMS is able to do the reverse invoicing. So I'll be asking those questions so that you can answer. So let's talk about significant economic presence. This is called SEP. It is a tax in Kenya, and it is a digital tax system designed to capture revenue from multinational companies that have substantial economic presence in Kenya, even if they lack a physical presence. So this is a tax that have been input to replace the digital service tax, DST. And it is going to capture especially businesses that have digital presence, multinational companies that have substantial economic presence in this country. So they are trading, even if they don't have a physical office, but they are trading in Kenya, and they are trading especially digitally. And we have so many organizations that are doing that. They don't have offices, but they are working in Kenya. So what will be the tax rate? The SEP tax rate is effective 3% of the gross turnover, which is calculated as 30% of deemed taxable profit. So it is deemed to be 30% of the deemed taxable profit that the organization is having. So the 30% is now calculated as 3% of the gross turnover. So they are supposed to do this on a monthly basis. SEP tax is payable on monthly basis by 20th day, like VAT. Then they do 3% of the gross, remember, gross turnover, and they file it. It is applied to non-resident entities operating through digital marketplace in Kenya. So this is for non-resident. They are operating through digital marketplace in Kenya. Exemptions include services provided through permanent establishment, certain communication services, income subjected to withholding tax, and entities with annual turnovers below 5 million. So if they are doing in Kenya and they are below 5 million, they are exempted. So the biggest concept to understand is that non-resident, they are doing digital, they are operating through digital marketplace in Kenya. So there's the digital element, and they do it 3% per month. When this, the challenge of compliance. So how do you capture these businesses? So I'm very sure that there's alignment to just know, how do we capture these businesses? How do you know their gross turnover per month? How much is it? Remember, they are operating digitally. So how does the Kenyan government understand the gross turnover done every month? So there's a lot of compliance challenges, but I'm very sure by the time they are considering this, they should have also thought about that. So if you're under an organization like that is doing that digitally, then understand here. So there's some impact on business. So possibly this impact comes to us: high cost of digital services. So if these services are going to be charged on us, remember, for instance, if you do Facebook boosting, the boostings are now vatable. You pay 16% on that. And that cost is calculated back to you. So sometimes when you're doing Facebook boosting, you've done 500 shillings, the Facebook gives you a receipt that the service they are giving you is for 350, then 150 is VAT. Similar, high cost for digital services. So they're going to bring that cost back to the consumer, who is you and me. Potential risk of double taxation. Remember, some of these organizations, they have mother countries where they are registered, and they are paying taxes in their mother country. So coming now together that even if you're paying your taxes out there, you have to also pay your taxes in Kenya because you have significant presence in Kenya. the issues of double taxation also comes in. So there are a bit of issues, but we're going to see how it is unfolds. Who is exempted? There's a lot of exemptions when it comes to the significant economic presence. Of essence are organizations that are having non-resident persons with an annual turnover less than 5 million. So that is of significance. I'll give you that portion to read for yourself, the exempted. But what I would want you to really understand on this is that they are non-resident and they have digital. They are offering digital services, digital marketplace. Why is the need to look for the digital marketplace? Remember, for a non-resident company or non-resident person, when they want to do a business in Kenya, they register that business in Kenya. So that business is registered. For instance, if you want to come and sell cars from Japan and you are Japanese and you want to set up in Kenya, or there's something that you want to do, you come and register an organization here in Kenya as a branch or as a local organization or as a non-resident company, and you pay taxes. So for that person where they are given work permit or what, they pay taxes when they are operating in Kenya. But these digital organizations which happen in the marketplace, they can come in, they don't have an office, they don't even register a company, they operate in Kenya without paying taxes. So I think that is where the catch is, to just make sure that they also comply. I'll share the notes with you. Let's go to the changes in PAYE. So what are some of the changes that are happening for the year 2025, which affect the pay as you earn? So there are so many changes that have gone on. And remember, as an employee, there are so many deductions that are happening to your salary. Remember, we have the pay as you earn, we have the housing levy, which is still ongoing. We have the SHA, Social Health Authority deduction. We also have the NSSF deduction, and we have the NITA deduction. So for somebody who is doing pay as you earn, the 5 deductions are done on your salary. And there are so many things that are changing. Remember, the pay as you earn capping was increased to 32.5% and 35%. They were both added, and so many other changes. And it is something that will continue having those significant changes here and there. So there are some of allowable deduction that have been introduced. So contribution to the Social Health Authority are now allowed as deductions from taxable income. So when an organization does the contribution of Social Health Authority, that cost is an allowable deduction from taxable income. So as an organization, they are going to reduce their taxes. They are going to reduce their net profit, thus reducing their taxes because of this allowable deduction. Similarly, contribution to post-retirement medical fund are capped at 15,000 monthly. So if you're doing a contribution to the post-retirement medical fund, so there is a capping that you have to go to this point, 15,000. So could be 15,000 is the allowable deduction, but the rest is not allowable, or it's charged as a benefit to you as an employee, and you're going to be charged taxes on that additional money. So the affordable housing contribution are allowed to the extent of the employer's contribution. So the affordable housing contribution, remember, it has the 1.3% allowance that is deducted from the employee, and 1.5% from the employer. So both these three 3%. So that employer's contribution is allowed as an allowable deduction. That's reducing the taxable income and also reducing the tax that the organization should. So all of them, the allowable deductions, they are a benefit to the organization. So what are some of the other changes that are beneficial to the employee? Remember, for paying, we look both sides, because this is the money that is contributed from the employee's salary. They are being deducted. So there could be changes that are affecting the employee, and there are changes that are affecting the employer. So increased pension contribution. So this has increased, and it is a good sign to both the employee and the employer. Have increased from 20,000 per month to about 30,000 per month. So the pension contribution, you can do up to 30,000. 30,000 per month. Pension has a relief that the more you contribute, there's a relief on your pay as you earn. And similarly to the mortgage interest deduction, the limit for deductible mortgage interest payment has been raised to 360,000 per year. So both, they have a relief, and that relief also means that it has also increased, and it is going to affect your pay as you earn contribution. So why do we increase, or why do we do these cappings? So that the employer does not misuse them. So for instance, if the employee's contribution to a registered profit fund is opened, is not capped, it is open to any contribution, the company can even contribute 100,000, 200,000 for employee per month, but they are not even actually contributing that money. They are stating that in their books to just avoid or evade tax. So that's why we have these cappings when it comes to the pension, to the insurance, to the post-retirement medical fund. That's why we have those cappings, to just avoid misuse of this to do tax evasion. The other changes, we have the free meals and non-cash benefits. The threshold for tax-exempted meals provided by the employers has increased from 48,000 to 60,000 annually. So remember we had the employer could provide meals to the employee at about, I guess it was 4,000, yes, 4,000 per month. So and the advantage is when you provide this 4,000, you accept it as cost. It becomes an allowable deduction for tax. But if you provide this person meals more than that 4,000, I guess 6,000 could be 5,000. Yes, it's 5,000. So if you provide this person meals above 5,000, so you provide meals of 7,000, the 2,000 is charged as a benefit to this employee, and it is charged taxes. It becomes taxable on their salary because now it's a benefit. So now I guess with the cost of living, possibly providing meals to an employee per month could be at a cost of 5,000 per employee. So you can calculate 5,000 per employee, multiply by the employees that you're having in the organization. Make sure that those meals don't exceed that amount of money. Then that amount of money, that cost, you can bring it to your profit and loss as a cost, which is going to reduce your taxes that you're going to be paying. Similarly, the non-cash benefits up to 60,000 per year are also exempted from taxation. So any other non-cash benefits that you provide to the organization, to the employee, as long as it's below the 60,000 per year, is exempted also for taxation. It means it can be an allowable, it is an allowable deduction, and you're going to use it to lower your taxes. I hope it's clear. So continue coming to this webinar so that you can continue learning and continue asking the questions on the chat. I'll have time to answer a few. So let's continue to the changes in NSSF contribution. So changes in NSSF contribution. So there are a few changes that have happened effective February 1st. So we are 13 days. And what are these changes? Increase in the lower limit from 7,000 to 8,000. This implies that there is an increase of contribution from 420 to 480. So if you contribute, the lowest minimum that you're supposed to contribute for NSSF is 480 shillings. The upper earning limit for pensionable income has increased from 36,000 to 72. That is double. This implied an increase in contribution from 2160 to 4320. So those changes have changed, and I'm very sure there are some of you that have seen, or if you have not, in the salary of February, you're going to see changes in the NSSF. These changes happened last year, and there are some organizations that were able to adapt to the new rates. As per that time, there are others who are still lagging behind. So I'm very sure right now is a point of compliance with the new deductions. So what are some of the changes, the impact of the changes in SSF contribution? It lowers earners experience proportional increases due to high minimum threshold. High earners will see substantial increase in their deduction. Overall take-home pay is reduced, is due to increased deduction. So there will be some changes in your deductions. So let's go to the changes in Excise Duty Act. Sorry. So let's talk about excise duty. I hope you understand what is excise duty. This is a duty levied to excisable goods. And these excisable goods are many. They are from digital goods to mostly what we know is water, beer, spirits, those wines. There are some cosmetics that also have excise duty. So depending on what business that you do, then you're able to look at the taxation that is due. And for many organizations, when I talk about even tax audit, I always say that the organizations that have a lot of tax obligations. So you may find an organization that is doing manufacturing, especially manufacturing of beer, water, because they have excise, they have VAT, they have income tax. You find they are withholding agent, they have employees, so they have pay, and they have all those tax obligations. They become very prone to audits. So depending with the nature of the organization, the turnover, the tax obligations registered, you find some of these organizations, they are always under audit. They're always under audit because of the nature of business. So what are some of the changes? Imposition of excise duty on services provided by non-resident through a digital platform. So the amendment has introduced excise duty on services offered by non-resident through digital platforms. Remember, we had the SEP, but now we're also having something else. If you're offering those digital services, there's also an excise duty that you're supposed to be doing. Non-resident provider of digital services shall be required to collect and remit excise duty. This could do so through a simplified method to be provided by KRA or through tax agents. So it's something that is ongoing. So we're going to see, and I'm going to report to you the progress. Excise duty remission on spirit made from agricultural products grown in Kenya. So there's an amendment that the spirit made from specific local agricultural products, excluding barley, will be included in the list of alcoholic beverage from which the cabinet can waive or reduce excise duty. So when you are a manufacturer, especially for beer, spirits, wine, there's always a lot of amendments that are happening, and a lot of conversation that is going on. So it is very important for you to be able to understand and just be available to incorporate the changes. Also, there's an extended period for payment of excise duty by manufacturers of alcoholic beverages. So previously they were given 24 hours. So that was a day to remit the excise duty, but now they've been given 5 days, at least to get a cycle and to get payment. Remember, excise duty is charged on manufacturing of that drink or that good. It's not on sales. It's not like VAT. It's on manufacturing. So sometimes you charge something that you have already in store. The point where you sell it, you're also selling it on credit by the time you even recover that money. So that complaint that you're giving us 24 hours to remit, yet even that 24, we haven't sold. We have not even sold that product. So the extension for 5 days, I think is also a welcome move. So there are some new rates for excise duty rates. So I'll share with you this so that you can see where if your organization or whatever you're selling has an impact, that you can be able to just look and see the new changes that are happening, and the new excise duty rates. So what are some of the changes in the withholding tax? So there are some changes in the withholding tax. So withholding on payment from supply of goods to a public entity and digital marketplace payment. Today we have really talked about digital marketplace. I think that is one of the biggest concentration with the tax authorities this period of time. So the Act has amended the third schedule to introduce withholding in respect of payment made by specific entities for the supply of goods at a rate of 5%, non-resident, and 0.5 for residents. So goods supplied to public entity and digital marketplace payments. Suppliers now face increased compliance required, including record keeping and filing return. Deductions could impact cash flow, especially for small businesses. Remember the withholding, which is done to public entities. So this is supplies that you're supplying to the digital places, the 5%. So you also have to do a lot of compliance. When you hear about withholding, withholding is get introduced at the point where the tax authority feels that there's a lot of tax losses that are happening. So when a withholding tax is introduced, it enhances compliance. So for you who is being withheld, you're supposed to increase compliance. You're supposed to keep your records very well, do the returns very, very well. So withholding tax is a tax to improve on compliance, especially for areas where they have compliance issues. Withholding on digital marketplace payments, I've talked about that. Payments for sale of scrap to be subject to withholding tax. So there's a lot of issues when it comes to the sale of scrap. And anyone getting involved in that business, you should also know there are so many regulations, even regulations when it comes to licensing and so many other things. So it's also a very tricky business, which you should understand about taxation. The withholding tax at a rate of 1.5% on gross amount for both resident and non-resident payments. So these are the changes in tax in VAT. So following the amendment, certain goods have been reclassified to be either taxable, zero rated, or exempt as follows. So I'll share with you this so that you can see if you are affected. So for instance, I can see the agricultural pest control product and fertilizers from zero rated to exempt. And someone might ask, what is the need of zero rating to exempt? So there's a difference, and there's a need of doing that. So when you change something from exempt to standard rated, from exempt to standard rated means that you're going to be charging VAT 16% on that product, and you're going to do the output and the input VAT. So you're going to do the output and the input VAT and pay the difference. So that is and previously when it was exempt, the VAT element on the purchases, you are accepting it as a cost to your organization. So when it is zero rated, the VAT on your purchases, you are supposed to be refunded. So there's a refund that should happen. When it is exempted, the VAT on your purchases, you're supposed to treat them as cost. When it is standard rated, the VAT on your purchases, you're going to deduct from the VAT on your sales, and then you pay the difference. So those are the difference. The best scenario is when something is zero rated, so you're going to get refunds. So for it to be move from zero rating to exempt means that you bear that cost of the VAT. So the government withdraws those VAT refunds. So it is beneficial to them, to the government, when something is exempted. So you're going to see that of concern is a transfer of business as a going concern. It was standard rated to exempt, which is very good. So this is where you're selling a business. And this I've seen this as a tax query so many times when the business is changing hands and it is being sold from one director to another, or the stock is being sold or something. So there was always a VAT element that you have to evaluate the goods and the business, and then you do the standard rated. So being exempted is a very welcome move. Okay, so let's go to the changes to the Miscellaneous Fees and Levies Act. So changes to the Miscellaneous Fees and Levies Act. So this is Cap 496C. Increased railway development levy. So the Act has increased the Railway Development Levy, RDL, from 1.5 to 2%. So the implication is high cost when bringing goods into the country, and increased production costs as a result of the increase in the levy. So remember, most of our goods, we are importing them, and the raw materials. So those railway development levy is going to affect that manufacturing production costs of the items. And something like this, these are changes that keep happening. So it doesn't have to have a finance bill and a finance act for it to go through. These acts are the changes and the amendments are taken to the parliament. There is a process to follow. The first reading, second reading, hearings, until the change happens. So there are always ongoing processes for these changes, even right now, which we'll keep telling you as the changes become legal, then we're going to be sharing. So other tax trends. So if you remember the tax amnesty, which was now which was fully came on board last year around December. So it is ongoing. And it also incorporated June 2020. It also included the year 2023. Previously, the previous tax amnesty was ending December 31st, 2022, but this one has also included 2023 period. So you can apply for that tax amnesty, and it is ending June that year, the 2025. So we are about, could be 4 months. So how do you do this and the benefits? So if you're having penalties and interest, you pay the principal amount, then you get an automatic waiver of the penalties and interest. So the application, those who have not paid all principal, So you and how you can do it also, if you're having a challenge with the principal amount, when you pay a principal amount, you request for that amnesty. When you pay the other principal amount, you request for that amnesty. You can go systematically. You don't have to wait until you pay the entire full principal for you to enjoy the tax amnesty. The application process is online. It is very easy. When I'll be talking about, I don't know when we have understanding iTax, it is very easy. So I did not show you how to do it. Possibly I can show you next week on Friday how to do the amnesty, but it's not hard. So the payment deadline is by June 30th, 2025 to pay the principal amount. Failure to pay taxes. So by that year, by July 1st, if you not pay, they're going to start demanding the penalties and interest. And it's also, if you have a tax case which is ongoing, you can request at this particular period to just finalize on it so that you can enjoy the amnesty. So let's talk about reverse invoicing, and you're going to tell me if your ETIMS can be able to do reverse invoicing. So it's a part of ETIMS, and how is it working? This is where you have somebody who doesn't have ETIMS, or they don't have machinery, and they are coming to sell to you. And you're like, give me an ETIMS, and they tell you, oh, I don't know how to do ETIMS, I don't have it. So you can actually raise an invoice, an ETIMS invoice on their behalf. You are the buyer, but you raise on behalf of the seller. So that is reverse invoicing. So the buyer, instead of the seller, uploads the electronic invoice to KRA. The buyer system via ETIMS platform ensure that the tax obligations are captured accurately for both the buyer and the seller. So you're going to tell me if there's somebody who is if you're able to do that. So key features, ETIMS Lite. This is a simplified version of ETIMS designed for small businesses and informal sector. It allows these businesses to easily generate and including mobile through the Citizen platform. Okay. So I know you know ETIMS Lite. ETIMS Lite is a *222# that you can do. I know ETIMS still has so many challenges. There are times that it is down, there's time it's not working properly, but I think it's still work in progress. So reverse invoicing primarily benefits small and medium SMEs and informal traders who may find the full invoicing process challenging. By allowing the buyer to generate the invoice, it makes the tax processing more efficient and ensure accurate VAT reporting. So you cannot tell KRA that this client did not give me an invoice, an ETIMS invoice. No, you can actually do reverse invoicing on their behalf. So why is the reverse invoicing used? To reduce tax evasion, to support small traders, especially those in the villages, mama bogas, who tells you, oh, I don't even have a phone number. You can raise that invoice. Improve efficiency. Oh, that was the last one. So let me see your questions. And I want to ask, have you done reverse invoicing? So are farmers also expected to be reverse invoiced when they supply product to them? Yes. So for those farmers who are telling you we don't know how to use ETIMS, do reverse invoicing on their behalf. There are companies doing the same. Wow, that is good. Levy said so. There are companies who are doing reverse invoicing. Do Mamambogas need KRA PIN for them to be done reverse invoicing? I think so. Because ETIMS, you have to supply the buyer's PIN and the seller's PIN. I think they should provide you a PIN number. A PIN number would do. I don't know if it is accepting the ID number or when you input the ID, also inputs the PIN number. Okay. So please clarify on SSF Tier 2 contributed have been contracted out to register pension scheme. If so, for pay country NSSF, will there be, okay, let me see that one. So for NSSF, we have Tier 1 and we have Tier 2. And Tier 2, you have the option of registering it. Let me look at that. Of registering it in another organization, which is not NSSF. So there's that portion where Tier 2, So there are some insurances that have been registered for this Tier 2. So there are organizations I've seen that is doing both tiers in the different organization, and it is ongoing. Does reverse invoicing only work on ETIMS Lite? No, it's actually not working. It's working on everything. I don't even think it is working on, ETIMS Lite is the *22#. I don't know how. For the ones who have used can tell me how it is, but I'm very sure it is cutting across. Is reverse invoicing the buyer initiated option? Buyer initiated option. So we have the buyer and then we have the seller. So the seller is the one who doesn't have an ETIMS. So you as the buyer, you're the one who is doing reverse invoicing. So it's buyer initiated. You're the buyer who is initiating this option. And this is a discussion that you can do with the seller and tell them, because you did not provide me ETIMS, then I'm going to raise an ETIMS on my end on your behalf. The accrual circular for meals by KRA last year, the amount exceeds the threshold, then full amount is taxable, not the difference. And you So my co-host George, I would want you to answer that question. So for me, what I would say, Mohammed, why don't we stick to the 60,000 that is provided? That is provided. So a minute, I'll answer that question. Please clarify if there was a law passed to exempt ETIMS compliance to businesses with less than 5 million in sales. So that's a good question. So for businesses that are below 5 million, remember you're not VAT registered, but ETIMS has all the section. It has the VAT, it has VAT standard rated, it has exempt, it has zero rated, and it has a non-VAT option. Non-VAT. So for everybody has to use ETIMS. So if you're less than 5 million, you go to the ETIMS non-VAT. So this is where you find someone who wants to do business with you, and they tell you, provide us an ETIMS invoice, and you're like, I'm not ETIMS registered. So any business in Kenya should be ETIMS registered because there's all those options. So you go to the non-VAT and you do it. The catch is here is that now KRA understand that you have a business. And come next year, you're not going to do filing on a monthly basis, but come next year, you have to declare all those incomes that you have received. You should do a business income, like an audit, and show this is a business income, this is the expenses, and these are the taxes due. So Nasibo, you might not be ETIMS registered or ETIMS compliant and continue doing your business, but their organization will tell you that for you to trade with us, you have to be ETIMS compliant. So don't hold back. Just register for ETIMS non-VAT and continue doing your business. So how does the simplified the SEP that you're talking about impact small and considering its 3% turnover-based structure, does it encourage formalization or place an undue burden on micro expenses, micro enterprises? So as I mentioned, it is a digital tax. So the is a digital tax. So the essence is to capture those organizations that are doing business, significant business in Kenya, but they are not registered in Kenya, but they are doing business in Kenya. So the catch is to be able to let them pay taxes in Kenya. So how they do it, how they capture them, the regulation, the compliance, that is now on their part. How does another pension reduce NSSF? Another pension. Mariana, I did not understand the question so well. But I don't think so. For NSSF, you're supposed to do the calculations per your salary, per your basic salary. Even if you have other pension, it doesn't matter. For NSSF, you're supposed to do the portion that you're supposed to do on your salary. If you need to add other pensions, you add on top of what you have paid for NSSF. So you cannot say, I'll pay this pension and not pay NSSF. No. You have to pay the NSSF first. Is there any specific PAYE template? If yes, please share. We have, there's the PAYE template. And if you go online, you're going to see it. There's a template for pay as you earn. I don't know if we have one, but it is there online. And then also the pay portal, the iTax portal, the pay, when you're filing for your pay, it is automatic, it is calculated. So when you input there that the basic salary is 30,000, then you continue with it, you say the car benefit is 20, the other one is house benefits 10. You fill in the gaps. If there's no house benefit, you put a 0, the other 0. Then it is going to do an automatic calculation and even reduce the relief, and then you get the amount of money that you're supposed to pay. So it has those calculations. So Halima, you can put your email on the list, on the link. Kindly, my co-host, do the list again, the registration link. Can I raise ETIMS receipt from last year that I did not receive from my supplier? So ETIMS is, you cannot backdate ETIMS. It's done on a daily basis. And remember, by the way, my co-host, we did not talk about auto-population. Possibly we're going to talk about auto-population and the challenges with the auto-population. And for you to also share with me what is your feel on, is your VAT aligning every month, or you're having challenges with the outer population and getting so many other purchases and sales that you don't know? So I would want to hear what is your feel on the outer population. So okay, let me. Okay, so I guess I lost that one. Have been raising ETIMS invoice via eCitizen and do not know, does this affect my filing? I tried filing this annual return and it went through. How do I file declaring income? Hey, Moendwa, if you did ETIMS through eCitizen, kindly go back, check your portal and see how much money you raised out of your ETIMS and do an amendment. Because filing a new return, yet you had raised ETIMS, is going to raise an audit query. So kindly check back and do a business income, recognize the incomes, do some expenses, and then file. Can you raise reverse invoicing without consent of the supplier, e.g. farmer, for example? So for me, I would say kindly consent with the supplier. For me, that's what I would say, because they are supposed to do filing on their side. Remember, you have alerted KRA that you've done a business together. So it's going to have a negative implication on their side if they don't know that you actually raised it. So one of these days, someone is going to call them and tell them, you did not file returns for 2024, yet we can see business income. And they're like, from where? So kindly consent or alert them. And you can do it as a company rule that for you to transact with us, you have to have ETIMS. So if they don't have ETIMS, you say, we're going to do reverse invoicing, and those are the rules. So what is likely to happen for non-ETIMS compliant purchases, sales while doing the returns for year 2024? A good question, James. Remember when ETIMS was introduced, and this was one of the biggest areas that they say that all our supplies, all our purchases, our expenses have to be ETIMS compliant. So that was for 2024. They insisted that all of them have to be ETIMS compliant. But remember, there were issues that came on board that the Finance Act 2023 was taken to court, which had was the one that had affected ETIMS. So there were so many issues that happened during the year that kind of brought down that arrangement. So for now, my thinking, this is Regina, not anybody else. My thinking is that for this year, for the non-ETIMS compliant purchases, especially purchases, not sales, purchases could be accepted. But coming 2025, this is tax is something that is ongoing. There's always those new regulations. So I foresee in future, if right now the auto population is working, remember auto population was even introduced last year. The other year, actually 2023, they had done auto population and it did not work. There were so many issues, but right now we have complied with auto population. Whatever data we receive is the data we are filing for VAT. So if out of population, they have pushed it to a point where we have now compliant with it, then I'm very sure that in coming future, all our purchases, all our expenses have to be ETIMS compliant. So as an organization, possibly for 2024, because there were legal issues, could be my thinking, could be not very strict, but coming in future, all these things are going to be really pressured. So for your organization, what you can do, just for year 2025, why don't you push to be 95 or 99% compliant with the ETIMS? So make sure that all your expenses, all your purchases are just ETIMS compliant. Just push that button so that come 2026, when they say now 2025, we are disallowing all the expenses which are not ETIMS registered, do not be having challenges. So that's a good question, James. So let me answer just a few more and then we call it a day. My co-host, you can give a calendar booking. You can do a calendar booking. You can do a calendar booking. So the calendar booking is free of charge for a tax query. You might be having a tax query that I will not be able to answer right now. Do a calendar booking. It's free of charge. 30 minutes consultation is free of charge. But if you ask us questions beyond 30 minutes, we're going to charge you. So Frederick is asking, I raised invoices, but I couldn't download them. The status was showing pending up to date. What could be the problem? So as I mentioned, the outer population has a challenge. Invoices raised by the ETIMS, e-citizen ETIMS. Tunajua hiyo. So ETIMS it's divided in so many sections. So there is the ETIMS Lite, which is the USSD, the *222#. We have the ETIMS on e-citizen. You can go to e-citizen, do ETIMS. There's ETIMS on KRA portal, iTax portal. You can go to the iTax portal and raise an ETIMS. There is ETIMS software now that you download on your machine. There's ETIMS that you buy a machine that has ETIMS. There's ETIMS that is online connected. So there are so many ETIMS that you can use. So there are some ETIMS that will have challenges. So previously I've seen the ETIMS that was raised out of a citizen having a problem with when it comes to auto population. So this is a work in progress. You keep talking to your suppliers. So if you find that they're having a problem on this way, you can try them. Why don't you use and this and this? Why don't you do this and this for you to be able to raise the invoice? If they raise an invoice and you can't find it on auto population, still you can You can issue them a credit note and then you reissue. I don't know how are you surviving without a population? Okay, okay. I foresee out of population of income tax return in the future. Francis, I love that. And it will kick out the work of auditors. I guess tunataka tufukuzwe kazi. So we're going to see that. I'm very sure that we are going to see that in future. Can anyone withhold tax? I offered consultancy services as an individual consultant to a micro business, and they want to expense it for tax purposes. Yes, Jerry, any organization can do withholding tax. You don't have to be registered to do withholding, especially for consultancy services. You don't have to be withholding agent. So they just go online, they give your PIN number, the amount, and they get the withholding certificate instantly. And for you who is, some organization is telling you that you're going to withhold some amounts, make sure that you get that certificate. So what can we do to mitigate the risk of fraud from buyers raising fake reverse invoices? So who is raising fake reverse invoices? I'm very sure that you're supposed to see this invoice on your auto population. So go ahead and look at, if they give you that in, because at the end of the day, that invoice should be, you should see it physically. You can go ahead and counter check. And when you open the iTax portal, you can see PIN checker, the control number checker. There are so many checks there that you can just do the checks of that. You can scan the QR code. Remember, iTax portal, iTax ETIMS receipt has a QR. It has a QR code. You can even scan it. So there's so many ways of you understanding if that invoice is it's legal or illegal. And of course, the auto-population area, which is supposed to auto-populate. Please advise me on this. I have a business registered as a business name. My net revenue is not 5 million, but I want to register it. Please advise between LLP and limited company, which is the best? So LLP, you have to incorporate a partner. I think in LLP, Fidelis is a partnership. And the limited company you can register as a sole person, as you alone. So when it comes to LLP, the both partners that you're having, you co-share them, you take the obligation of tax. So if you raise income to about 1 million, you share that 1 million, and then out of sharing that 1 million, you pay taxes on individual PINs as partners. So for the limited company, is a limited liability company, it has its own PIN and it pays taxes as an organization. So that is the biggest difference. So if you're having partners, you can go LLP. If you're just alone, you can do limited company and register as a sole director. And there are so many other benefits of each both. So you can also research more. In the future, could VAT filing happen automatically? I'm hoping that is where we are going, because for now the auto-population is now in place. I think it's not happening automatically to allow you to just counter check what is happening. Kindly advise on international client invoicing. So is the client, are you invoicing in Kenya, or the international client is invoicing you? So who is invoicing the other? So who is invoicing the other? So if it is you who is on invoicing the client, what are they giving you? The international, remember export services, export goods are exempted, they are zero rated. So you raise an ETIMS which is zero rated. If they're invoicing you, there's still ways on how to invoice you, even with VAT, even if they are foreigners. So there are so many ways of doing the invoicing. So I encourage you to do the invoice checker is working. I have sometimes received ETIMS receipts saying at a petrol station, but the QR code shows that the data has not been captured. So there are so many challenges with the auto population, but also make sure that your supplier are also able to understand how they raise the ETIMS. So some of these ETIMS issues are the people who are doing the ETIMS are not doing the ETIMS correctly. So there are people who don't have issues with ETIMS out of population because their suppliers and their customers, they've been able to capture the details correctly. So make sure that the details are captured correctly and the information is remitted to KRA. Remember that portion where ETIMS, you're supposed to remit that information to KRA. So make sure that the entire process is done very, very well. We are credit filers. How can we claim VAT? What business are you doing, Gladys, that you're always on a credit position? Always being on a credit position is a trigger for tax. So kindly, Gladys, KRA will call you one of these days to ask you what kind of business are you doing that you're always on a credit position. So it's not a crime for you to be in credit, but you cannot be there all the time. If you're not doing zero rated goods, they want to understand the nature of business. We are credit because most are not vatable, but we have vatable purchases, e.g., Gladys is answering, e.g., we are credit because most of our sales are not vatable. So your sales are not vatable, but we have VAT. Then those VAT should be accepted as cost if you're not selling with the VAT. So Gladys, I would want to understand your nature of business better so that I can be able to advise you much, much better. So kindly do the calendar booking to continue with the conversation. I can see my co-host was answering a few of your questions. So we talked that ETIMS cannot be backdated. So if you miss something for December 2024, not unless you do it in July 2025. Yeah. A business owner has been forced to file TOT, turnover tax. Is it right? No, it's not right, Newton. So you can choose TOT or you can choose income tax. So possibly you are forced because you do not have a good tax representative like us. So you can talk to us so that we can reverse that. So asanteni sana. Asanteni sana. I see the questions are so many. There are so many. What if of a supermarket invoice that might not have a buyer's PIN? So if you're going to use a supermarket invoice, you should tell the supermarket to include your PIN. So go there and tell them to, and they are doing that. They are doing that. So they are doing that. If you're going to use it, let them include your PIN. So they are doing that. So asanteni sana, the recording is there. The notes are there. All you needed to do is to have your email registered there. This content is on YouTube. You can watch it again. And if you need an answered question, if you need to talk to me, the calendar booking is there. You can talk to me. We do a lot of tax consultancy. And let me just go back. Kindly look at my notes for 5 minutes as we end. So we have upcoming events. So we've done the tax trends today. On 19th next week, we are going to talk about taxation in real estate industry. You can register for that. We have a CEO breakfast in Thika, and you must be a CEO and have turnovers, 20 million and above. So there's a criteria for entry. We're going to have a very good conversation. We have the tax compliance and emerging issues tax webinar that will be happening on Friday. We also have a CSR program that we call it Skill Up Mentorship Program that will be happening on 22nd. So that is a taxation for real estate. If you go to our social media, you're going to see them and you can register so that we can also remind you. So for the CEO breakfast, we're going to talk about how to navigate complex tax changes while staying profitable. I know when we all see these taxes and so many things, we are like, can we still make money in this country? Yes, we can. We're going to talk about that discussion, tax compliance and emerging issues in tax. That will be on Friday. We also have Taxation Masterclass. We are the biggest in tax training in Kenya. So we are having an online taxation masterclass that will be happening in March. So from 10th to 21st, 2 hours from 7 to 9 every day. It's about 10 days. So 5 days, 5 days, 10 days. And it is very informative. We give you taxation 101 from every tax obligation to compliance to audits to the tribunals, to the tax audits is very comprehensive. And we offer it at 25,000 and you can request for CPD points because of learning. That is a CSR program that we are learning. We are handling. We shall be doing it on 22nd. I'm going to share this and you're going to see them. Yeah. So we are an audit company and we do audit, tax, and advisory. There's something that I should have mentioned. We have an accounting software, my Accurate Book software, and we are integrating it with ETIMS. So next month in March, we shall be releasing my Accurate Books, ETIMS compliant, ETIMS integrated. So we're integrating it with ETIMS to just make your easy work. So this accounting software is free of charge. So you go to Play Store, my Accurate Books. You're going to see a point of sale, which is free of charge. And the paid version that has now the other functions, the expenses, the purchases. Yeah, we are charging at 500 shillings per month. So and it is very easy, very user-friendly, and it is very good too. On Friday, come next week on Friday, I'm going to do a simple demo on how to use my Accurate Book software. So you can go to and if you need anything, you can talk to us, or if you're stuck somewhere. So that's our number 0728 89 74 29. So kindly just save the number. Possibly you have a tax query, you want our services, or you want the software, you can have our number and you can talk to us. With that, I say thank you so much. Have a lovely Valentine's Day. Enjoy your day. No, the CEO breakfast is free of charge, but the criteria, you must be a CEO. And the turnover, 20 million annual turnover, annual 20 and above. So that is the criteria. It's free of charge. What is your YouTube address, Dr. Regina King'ori CPAK? Gladys is asking, what about the CEOs not in Kenya? Okay. Oh, all right. So have a lovely afternoon and enjoy your day. Thank you.